Glenn Sofraz, ACCA Council Member and MIPA Chairperson. MIPA Board Members. Sanjeev Sharma, MIPA CEO. Chairperson of the ACCA Mauritius Network Panel and other panel members. Our distinguished speakers, Pierre Dinant, Anthony Langsheng, and Dr. Bhavesh Jagannath. Our moderator, Clancy Apavu. Representatives of the media, dear members and guests. Good afternoon and welcome to our post-National Budget Discussion Forum held in collaboration with MIPA. It is all about people, and people above all. Such were the words of our Minister of Finance, Economic Planning and Development, Dr. the Honourable Ranganathan Padhyachhi yesterday, as he tabled the budget for the fiscal year 2022-2023. Indeed, several and impactful social measures were announced yesterday, and as we all walk the difficult path of recovery, the 2022-23 budget measures do spread a feeling of being socially uplifting. Measures geared towards the re-engineering of the economic mindset and the safeguard against unemployment, as well as figures around the IMF forecasting GDP to exceed pre-pandemic levels by the end of 2022 and unemployment going down, add to the encouragement and confidence the budget speech intended to impart. While measures announced in the budget place people at the center of the strategy, with economic independence and sustainability presented as core tenets of this budget, and the recognition that SMEs are the lifeblood of our economy, let us analyze at today's forum how strongly and how truly all the measures put together give our country and people the real impulse needed in the current unpredictable global economic context. I was saying that there will be a questions and answers session after our three presenters have spoken, but I do invite you to please send your questions or comments through the chat box throughout the forum, and we shall address them during the Q&A session. I would also like to sincerely thank Clancy Apavu for moderating the Q&A session. Clancy, an FCCA, holds an MBA in Global Business Strategy from Oxford University and a degree in Management Information Systems and Computer Science. He is the founder member and Chief Executive Officer of HLB Mauritius and Senior Partner of HLB Apavu and Associates. Clancy took part in the ROSC initiative of the World Bank for the accountancy profession in Mauritius and has served as the president of Business Mauritius, ex-Mauritius Employees Federation, and currently sits on various boards of directors and strategic committees in both the private and public sectors. He participates actively in different business forums, boards of trustees and foundations, which gives him the opportunity to conduct social work at different levels. He is the worldwide leader for the non-for-profit sector of HLB International, which has presence in more than 160 countries in the world, and he is a prominent proponent of the UN Global Compact. Without further ado, I thank MIPA for their partnership and invite MIPA's CEO, Sanjeev Sharma, to address you. Thank you.
Thank you, Madhvi. Mrs. Madhvi Ramdim Clark, Head of ACCA Mauritius, Mr. Pierre Dinant, Consultant and Economist, Mr. Anthony Langsheng, Country Senior Partner at PwC Mauritius, Dr. Bhavesh Jagannath, ACCA Mauritius Network Panel, Vice Chairperson and President of the Africa and Emerging Tech Hub, Mr. Clancy Apavu, CEO of HLB Mauritius, members of the ACCA Mauritius Network Panel, members of the MIPA Board, and members of the MIPA. Ladies and gentlemen, good afternoon. It is a great pleasure for me to address you for this year's virtual post-budget discussion forum. I would like to thank ACCA Mauritius for their collaboration in organizing this annual forum. I also wish a warm welcome to all the participants. Your mere presence here today reflects the importance of this forum as a platform to invite and ignite stimulating conversations on the implications and challenges of the 2022-23 national budget presented by the Honorable Minister of Finance, Economic Planning and Development yesterday. This year's forum has assembled a distinguished panel of speakers who, being well-versed of the Mauritian economy and economic affairs, will have much to contribute to our understanding of the budget's implications. As you are aware, this year's national budget was presented at a critical time for our country. The Honorable Finance Minister delivered his third budget speech in a tense international context marked by the ongoing Russia-Ukraine conflict and the repositioning of geopolitics that has resulted in a significant increase in global energy and commodity prices due to the shortage of supply and disruptions, the continued albeit reduced prevalence of COVID-19, and now the spread of monkeypox. The prospect of a turnaround depends significantly on whether we are making the right choices and taking the right actions. The budget speech can be considered the first step to renewing Mauritius' social compact towards a fairer, more sustainable, and more inclusive society. Last year's budget provided a significant fiscal stimulus to support several key pillars of the Mauritian economy amidst international socio-economic turmoil. This year's budget is still in the shadow of the numerous challenges, and its focus must be to secure our recovery from its impact. As the title of the budget was, "We the People for the People" suggests, the budget announced measures that place people at the center of the strategy. A lot of focus is on the vulnerable, including the SMEs. The government announced that it has reviewed the definition of SMEs, enabling some 142,000 enterprises to benefit from special government support programs and grants. SMEs who sought support to ride out the COVID-19 storm will still benefit from an extension up to June 2023 in the SME Interest Loan Scheme and the COVID-19 Special Support Scheme. In addition to allocating 5 billion rupees to support SMEs, mid-market enterprises and entrepreneurs, the government will also be setting up a venture capital fund and will be providing a 50% grant for the purchase of recycling equipment and transport vehicles from local suppliers, applicable to those within the cooperative sector. MIPA will continue to work with relevant authorities to make the most of the budgetary measures and ensure that our members are able to benefit from those relevant government grants and schemes. One of the salient points highlighted is the decision to build on the momentum following the exit of Mauritius from the FATF list of jurisdictions under increased monitoring. We welcome the government's commitment to ensure that our AML-CFT legislative framework is strengthened through the implementation of relevant legislation, including the launch of a regional RMB clearing center this year, the issuance of RuPay cards and Indian QR code in Mauritius, the introduction of a national payment card for customers, and the revamping of FSC's framework to enable reinsurance companies to set up operations in Mauritius. To further improve the financial service sector, the government announced several distinctive measures, such as the setting up of a financial crime commission to coordinate the fight against financial crime. We welcome the government's decision to amend the Financial Reporting Act so that MIPA can cater for the conduct assessments for the purpose of registering public accountants and empowering MIPA to inquire into any written complaint made against any registered public accountant. MIPA will be able to take actions against non-registered persons who are giving the impression that he or she is authorized to provide professional services in Mauritius. As you may all have noticed, there has been a real focus on economic independence and sustainability in this year's budget. Several measures were announced to promote self-sustainability within the agro-industrial and energy sectors. As our economy relies on imports for more than 75% of our food requirements, self-sufficiency is now imperative. This budget aims at being more efficient and going beyond our current production possibility frontier by making the most of our resources through special grants, subsidies, and allowances within the agricultural sector. The budget also addresses the key issues related to the decline in purchasing power of the Mauritian households. The government took a bold step with the abolition of municipal taxes with the aim of easing the tax burden. Individual taxpayers falling within the low to middle class income and earning a monthly income of up to 75,000 will be subject to a progressive tax rate ranging from 10% to 12.5%, as opposed to a 15% on taxable income. Moreover, the government announced increased supports under Social Aid and Social Register of Mauritius and the reduced income tax rate for individuals earning less than 50,000 rupees. In summary, taxpayers do not see any personal tax increases, which may result in a boost in the disposable income of individuals in the lower income bracket to help with a rise in cost of living. From an international perspective, the government introduced a local top-up tax regime to ensure that resident companies of large multinationals are taxed at a minimum rate of 15%. This will definitely ensure that tax revenues from resident companies forming part of the multinational groups remain in the country. Moreover, the 2022-23 budget outlines a tourism agenda with the objective of welcoming 1.4 million tourists in the next financial year. The government has taken the decision to increase the marketing budgets of the MTPA by more than 10%, which amounts to around 400 million. There will be a focus on ultra-high net worth passengers through personalized and unique facilities, the refurbishment support to the hotels, VAT refund under the MICE scheme, and the rejuvenation of several tourist attractions and landmarks, among others. The budgetary exercise will instill confidence in the economy by building a stronger image of Mauritius as being a destination of choice for doing business. I'm glad to see that numerous policies enunciated in the budget were aimed towards improving the ease of doing business in Mauritius, namely through the implementation of the Business Regulatory Reform Bill, the opening of a bank account within a week for both individuals and businesses, and measures to attract and support young entrepreneurs. Improving the ease of doing business will have a significant impact on investment and economic growth. The budget also places a strong emphasis on infrastructure development, which includes road connectivity projects, social housing, community development, water supply facilities, and trains, among others. This aims to improve the quality of life and safety of citizens, especially for vulnerable citizens. There is a huge emphasis on the improvement of our drainage system all over the island through the National Flood Management Program. Besides traditional sectors, the Honorable Minister has considered some new development pathways, including the carbon-neutral industrial sector, green energy, and the blue economy. However, there was a lot of emphasis on several emerging sectors, including the financial technology and the science sector in this year's budget. To conclude, this budget indeed contains a series of incentives and measures to promote key sectors of our economy, including agro-industry, construction, ocean economy, tourism, financial services, manufacturing, and the digital economy. However, for Mauritius to recover and prosper, there needs to be diligent monitoring and timely implementation of the proposed measures. The success of this budgetary exercise will largely depend on the participation and commitment of the private and public sectors. While attempting to change the economy, this budget also tries to address the immediate worry of a population whose purchasing power is decreasing. The outcome will be determined by the realization of a strong domestic economic development, which is inextricably tied to the global economic landscape uncertainty. In light of the measures announced, MIPA will endeavor to work closely with all stakeholders to ensure that those measures are implemented as swiftly as possible to pave the way towards a better future for our country. On this note, I would like to thank you all for attending this virtual forum, and we look forward to having a productive session today. Thank you for your attention.
Thank you, Sanjeev. I now have the pleasure of inviting our first commentator, Pierre Dinan, a consultant and economist, to speak on budget figures and the social impact of measures of the new budget. Pierre, an FCA, holds a BSc in economics and was a senior partner at De Chazal-Dumay for 20 years until he retired in June 2004. He was also director of Multiconsult, a global business management services company, for 12 years until 2004. He was the founder chairman of the Mauritius Institute of Directors, and he has served for several years as an independent member of the Monetary Policy Committee set up under the Bank of Mauritius Act. Pierre has published 3 books on the economy of Mauritius, and he is a regular contributor to the local press on economic and financial issues. Pierre, the floor is yours.
Thank you, Madhvi. Good afternoon to you all. The budget, the national budget, raises so much passion that sometimes it is forgotten that its bare bones are figures. So I have been asked to just recall some of the basic figures which constitute this budget. The minister is asking us to allow him, the public sector, to spend in the coming year 22-23 some 30% of the GDP, 172.9 billion rupees, which is about 11 billion higher than in this particular year, which is ending at the end of this month. So this 172.9 billion represents 30% of GDP, whereas for the present year, the expenditure represents 32.4%. Does it mean that we are going to spend more? Less, because it's 30% against 32? No, we are going to spend more, but this is where we have to be careful about percentages. It is because our GDP is going to grow from 21-22 to 22-23. Just a reminder, the GDP in this particular year ending in June 22 is 498.6 billion, whereas for next year, 22-23, the GDP is estimated at 576.1. Quite an increase. And this, in fact, in terms of real growth rate, this means the real growth rate for the coming year will be 8.9% compared to 6.9% in the present year. High percentages, but they don't mean much, except that we have to remember that this is because we have had COVID and that the years are no longer comparable. And we have to be careful about this, and rather, instead of looking at percentages, look at the figures themselves. And just as looking ahead, it is estimated by the Ministry of Finance, in the documents published yesterday, that the real growth rate, that is excluding differences in the value of the rupee, the real growth rate is expected to be 5% in the years 23-4 and 24-5. But of course, these are just figures, and it means that we must organize ourselves about productivity and things like that. We'll come back to that. So this is the bare bones of the budget. Shall I also now? Yes. We must go also, excuse me, we must go also beyond the budget in a way. We have to look at the external sector, imports and exports, and one measure which is important to look at is the current account, the deficit on current account between imports and exports of trade and services. According to the figures published, the deficit on current account in this particular year is 12% of GDP, and the projections, official projections, next year 9.7%, in 23-24 6.4%, and in 24-25 4.1%. These are estimates, and we all know what it means. We have to work for it. So these were just by way of an introduction, the bare bones. And I would like now to come to government debt. It's well known that the budget deficit has been with us for years and years. And a deficit, we are all accountants, we know deficit must be financed. And the government debt, according to the figures which have been published, as a percentage of GDP, at the end of this month, in June, it is expected that the external debt will be equal to 36.8% of GDP, while our external reserves are equal to 174.6%. Therefore, the debt service ratio is going to be 5.7%. The estimate for next year is 5.4%. In a way, we are lucky. These are not very high figures. We are lucky because a lot of our public sector debt is internal rather than external. And we really need to ensure that this continues like that, so that at least if it is heavy for our budget, at least it is bearable from the external point of view. Now, much has been come out of yesterday's speech on social expenditure. And here are some basic figures. In the budget, the items which are grouped under social security and national solidarity, these items in the year 21-22 represent 38.3 billion rupees. In this year, therefore, social security and national solidarity, 38.3. Add on to this, health and wellness, 15.8, pensions of a public service, 11.2. so that the grand total is equal to 189.7. Next year, I will not give you the details, that's going to be too long, but this 189.7 billion rupees on social expenditure is going to jump to 216.3. 216.3. So we can see how the measures which are being, what is being offered this year will continue as we go along to increase the expenditure. This is something we have to bear in mind. Apart from that, from the social expenditure, I don't think I have much more to add, except to say that it was rather a surprise to see that there were no taxes except for wine drinkers and cigarette smokers. But as we go along, we'll have to ensure that in order to carry on with all these goodies which have been offered and which, as I've said, will keep their influence over the coming years, we have to ensure that we have the wherewithal to do this, and this brings us back to the economy. And one thing which I think was a good point at the beginning of a very long speech, it was this emphasis placed on agriculture. I tend to believe that after we have successfully diversified over the last 30, 40 years, away from agriculture, which was the right thing, we must now give agriculture back some of its importance. And indeed, the minister did lay emphasis on it, not the agriculture of yesteryear, but an agriculture particularly having to do with our foodstuffs, with animals, animal growing, etc., and also with the sea. So there are resources to be used, but these resources, we must not just talk about them, we must really set to work. And this budget has really done quite a lot on the solidarity side, but for us to be able to carry on like that over the next few years, we really need to go back to having I dare say, a newly diversified economy, with agriculture being a good part of it. One, in order to feed ourselves and our tourists, but also from an environment point of view, which we, Minister, I would say, did lay emphasis also on. So, very briefly then, these were a few comments I wanted to make to you. Thank you for listening.
Thank you very much, Pierre Dinan. And indeed, a rather unexpected surprise that no taxes were imposed except on alcohol and tobacco. I remind participants that they can send their questions and comments through the chat box throughout the forum. I am now delighted to invite Anthony Lumshing to deliver his analysis of tax implications and of the impact of measures announced on the offshore sector. Anthony joined PwC in 2009 as a director, promoted to tax leader and partner in 2011. He became PwC Mauritius Country Senior Partner in 2018. Holding a BA in economics and a master's in business administration, Anthony is also an associate of the Institute of Chartered Accountants in England and Wales and an associate of the Chartered Institute of Taxation of the UK. He is a regular speaker and contributor to tax and economic forums. He is a board member of Mauritius Finance, which undertakes activities to promote and reinforce the growth of the financial services sector. He has contributed to various consultations and reforms within the institution's technical committees. With more than 18 years of experience in tax, Anthony started his career in the UK, where he remained for some 10 years, before returning to his home country. Anthony's experience spreads from tax to corporate finance and audit, bolstered by an innovative approach, challenging status quo, pushing boundaries, and achieving growth. Anthony, over to you.
Oh, thanks, Madhvi, and welcome. I'm glad to be here on the panel today. What I'll be talking specifically is around the tax measures, and the way I'm going to be structuring my presentation today is around four things. One is just to give a quick overview of the taxes, then going into looking at from the company side, then individual, and finish off with some tax administration. So in terms of the overview of taxes, I think earlier Pierre Dinard was talking about the state of the economy and how the expenditure and the revenue side was stacking up. I just wanted to just give a quick flavor in terms of the tax revenues. So what I did, I just compared the estimates of tax revenues against what were original estimate and the revised estimate, which represent the actuals. And what we can see is that the government originally estimated that they would get 110 billion of tax revenues in the year 2021-22. And what they actually achieved is 107 billion. So that represents really around 97% of what they initially targeted. At first, I thought, you know, that 110 billion target was very high. If you look at what they did in 2020-21, they did 83 billion rupees of tax collection. And that 110 represented a 33% increase in the previous year's collection. But surprisingly, the economy has been doing well. I mean, there's been a tax buoyancy, there's buoyancy in the economy, and the revenue collection has been there. I mean, if you see the tax on income and profits, which is essentially corporate tax and personal tax, they actually exceeded that amount. I mean, they initially budgeted less and they achieved more. The only thing that they achieve a little bit less is in terms of consumption taxes, so taxes on goods and services, which were below the initial estimate, really reflecting that there's been a less consumption in the economy. So that's how the picture was, that given the buoyancy of the economy, it has been driving the tax revenues, and that's what we ended up in the last year. And if we look at the composition of that, we can see that 60% of taxes are coming from VAT and excise duty, so essentially tax on goods and services. Only 30% comes from income on profits, and the rest from property and other taxes. So given the high reliance of the government on tax on consumption, so essentially goods and services, to the extent that consumption in the economy is progressing and there's kind of buoyancy around that, is going to be driving those revenues. And yes, as Pierre said earlier, there hasn't been any increase or hiking taxes, given that the government was anticipating with the growth in the economy, that would also be driving some of the continued consumption pattern. So that's really an overview of the taxes for the past year and how the pattern of those taxes would go. So now I'll just go quickly into the different taxes, looking mainly at the corporate tax and the tax on companies. The way I've structured the company is to look at it from two sides. One is to look at it from a global multinational company perspective, and secondly, from a small to medium enterprise company perspective. I've summarized it around these two themes. So if we look at it from a multinational company perspective, there hasn't been much there, but I'll just summarize what has been in terms of measures. What we can see is that the first thing when I heard this, I was saying, oh, we're going to have a global minimum tax in Mauritius, which is essentially a 15% tax. What that means is going to be affecting mainly big multinational enterprises. So essentially groups with turnover of greater than 750 million euros. So this measure is being put in place essentially to address what we call the OECD, the BEPS, the Pillar 2, in terms of the base erosion profit shifting initiative. And what is being kind of recommended here is that Mauritius would, in line with international practices, adopt this minimum tax. So to the extent that, let's say, a multinational company fitting in those criteria has a subsidiary in Mauritius, and the subsidiary is paying, let's say, 3% tax, what Mauritius will need to do is to apply now a top-up tax of 12% to bring it to a headline rate of 15%. So essentially, those companies within those criteria will now pay a minimum tax of 15%. And the question now would be raised is, if those multinational companies would pay a minimum tax of 15%, and that would be the case whether they're in Mauritius or any countries we have signed up to the BEPS initiative, then irrespective of where those companies are, the same would apply, and there would be a minimum top-up tax of up to 15%. So the question would come from won't necessarily be any tax benefit attached to that. So that would be the uncertainty around those multinational companies. And following on from that, again, it's linked to the BEPS initiative. What they also announced in this budget is the digital economy. So here again, there's been a lot of debate about how to tax companies like Google and Amazon, etc. And different countries have adopted different approaches in terms of tackling the digital economy. What has been announced in this budget is to give the authorities the power to make regulation in order to implement this pillar 1 and 2. No, there's no detailed kind of analysis or anything that is being proposed, just the power given to the authorities, to the MRA, in order to be able to implement that. And some of the things that are currently happening is, for example, in the UK, there's a digital services tax that's being applied of 2% for digital companies having customers within those markets. But all this may change as the rules regarding the digital economy will become established. And here is just a matter of, in this budget, giving the institution the power to have those discussions. Another theme, which is around global businesses coming to Mauritius. Now, Freeport companies, that was really abolished. Now there's the reintroduction with an 8-year tax holiday for newly set up operators with a minimum investment of 50 million and with operation as from 1st of July 2022. But they would need to meet the substance requirements. There's nothing at the moment that has been said around those detailed requirements, and we'll need to really wait for information on those. Another aspect in terms of global business companies or multinational companies looking at Mauritius is there's this issue of premium travel visa. The premium travel visa does not really affect multinational companies because this is only given to individuals who are looking to come to Mauritius and work on a 12-month basis or longer. The problem that was there is that those individuals could create taxable presence for their employers to the extent that they were in Mauritius for a prolonged period of time. And to the extent that the employer of those individuals in Mauritius had corporate tax issues, they would then be subject to tax and social and potentially social contribution in Mauritius. So what the budget comes is now clarify the position and confirming that those foreign employers or those foreign multinational companies with employees working in Mauritius under the premium visa will not be subject to corporate tax. So that provides more clarity in terms of those multinational companies with employees taking benefit of that. So if I now move to some of the measures that are targeted at SMEs, Clancy talked earlier about the revisions to the definition of small and medium enterprises. So what has happened here now, the micro enterprise has changed from 2 to 10 million, and small enterprises from 10 to 30, and medium from 30 to 100 million. So what this allows, it allows for a greater number of companies to benefit from the SME kind of targeted measures. And one of those targeted measures is where in an attempt to promote purchases from SMEs, there was a measure introduced in the past budget which allow large manufacturers, so essentially manufacturers with a turnover of more than 100 million rupees, when they purchase product from SMEs, they would get 110% deduction for those purchases or for those costs that they would be borne through these SMEs. So now what has happened, they have increased the 110% to 125%. So they will get an additional deductions for purchases from those small enterprises. There has also been the introduction of waiver of penalties. So any penalties that may arise in respect of those SMEs for late submission and late payment, those would be waived and they will be able to take advantage of that. The other thing in respect to SMEs, there is now what they've introduced, a salary compensation scheme. In the past, there has been the wage assistance scheme. As you know, the wage assistance scheme has now been removed. And what has been put in place is this salary compensation scheme, which is available for SMEs in the non-export oriented sector. So for any employees which are in employment during the period from 1st of January 2022 up to 30th of June 2022. And what that refund is, if there's the SMEs with employees with basic wage up to 13,500, they can get a maximum refund of 500 per employee. And if they have employees with salaries between 13,500 and 50,775, they can get 400 rupees per employee. I mean, the budget doesn't contain any kind of details or criteria around this, and we'll need to wait for the regulations or the act to come to be able to get more details on that. But those are some of the measures that are available from a company perspective for SMEs. So now if I go and look at from an individual perspective, and what I'll be summarizing the comments here around three things. One is around the personal release and allowances, because there's been a lot which has been introduced or increased, I would say, in this budget. But also talk about the new progressive tax. There's a new progressive tax system. I mean, it was there before 10 and 15, but now they've introduced the 12.5 as well. And then I'll finish off on the individual with some other benefits that are available to individuals. So if we look at the different reliefs that are available, I thought it may be easier if I take an example that would illustrate some of these reliefs that are allowances that are available. So if I take an example, for example, if Jeanette has a salary of 2.5 million rupees per annum, and she has a travel allowance of 30,000 rupees per month, that's the scenario we are looking at. And what she has also, she incurs different expenses. So she has university fees and with her one kid. Then she also have medical insurance and premium of 30,000. Then she also make a pension contribution of 70,000. And she also gives a donation to the NGO of 70,000. So if you look at the computation, I've done one where we compare and contrast under the old regime and the new regime as proposed under this new budget. So under the both scenario, I mean, before and after, she has a salary of 2.5 million. Then she has a traveling allowance of 360,000, which is the 30,000 rupees per month. So the net income is 2.8 million for both, and the income exemption threshold on both sides is 435,000. And you'll note here that in this budget, the minister has not increased the income exemption threshold. So the existing income exemption threshold would remain in place for the next year. So there hasn't been any increases on that. Then the third thing that the government has put, there's now a traveling allowance. I mean, in the past, you could get a deduction for a traveling allowance up to a maximum of 11,500 to the extent that the employee was using his own car to go to work. Now that amount has increased from 11,500 to 20,000 rupees per month. So that's where there's a difference. The 11,500 per month was 138,000 a year, and the 20,000 per month in this new budget equates to 240,000 deduction in terms of travel allowance. Then the next thing, because this individual has a child which is at university education in university, then what this budget has introduced has increased the amount of tax deduction you can get in respect of the children in education. So the amount that was available as a deduction before was 225. It has now increased to 500,000. And I think there's a point to be made here that tertiary education in the past was only for undergraduate. They have extended that to postgraduate now. So that increase is also available for children who are pursuing postgraduate. And it's up to 4 dependents, so 4 children maximum. Then there's also, because that Janet is also making medical insurance. Let's see what has happened to this. The previous deduction was at 20,000. Now they've increased that to 25,000. Jeanette is also making personal contribution of 70. The previous allowable amount was 30. They've increased that to 50 under the new budget, which is allowable as a deduction. And also donation, the previous amount was 30. They've increased that to 50 now. So as a result of the new reliefs that are available, what Jeanette would now have as a chargeable income would be in the previous budget, under the old rules, it would have been 1.9 million. Under the new budgetary measures, it would come down to 1.5. And you can see there would be a reduction in the taxes of Jeanette by 21%. With those new allowances and relief. So that's that. And if I now go into the new regime, I mean, there's been a new regime in place And essentially under the new regime, any income that is up to 700,000 rupees per month and per year, that will be taxed at 10%. Anything between 700 and 975,000 would be taxed at, that individual would be taxed at 12.5%. And if the individual earns more than 975,000 rupees in a year, they will be taxed at 15% in excess of that. And if solidarity is applicable, that would also apply. What's important here is not really a progressive tax system. It's yes, there is a progressive rate, but once you fall outside those rates, you are not eligible. And I'll explain that with that example. So let's say we have Jack and Bill. They both have the same salary, which is 695,000. And one person, which is Bill, gets a bonus of 10,000. So you need to remember, before the 700,000, it's a 10% rate, and after the 700,000, it's 12.5%. So in this case, yes, Jack has 695, so the net income is 695 for Jack, and for Bill is 705. If you now less the income exemption threshold, you get a chargeable income of 370 for Jack and 380 for Bill. Then if we look at the tax rate, because Jack falls below the 700,000, then the tax rate is 10%. And because Bill is is greater than 700,000, the rate is 12.5%. So if you do the taxes at that, then what you'll see, there's a disposable income of 658 for Jack, and Bill 657,500. So even if Bill gets more money in terms of gross salary, the next disposable income ends up that Bill is in a worse situation. And that's where the all or nothing rule has anomalies, because it's not progressive. It's not the first 700, which is taxed at the 10%, the next tranche taxed at 12.5. It's once you get past that band, everything gets taxed as a uniform rate. So beyond the 975,000, then everything will get taxed at 15% plus solidarity levy. So that's some people misunderstood this, but that's how this progressive system would work. Then some of the relief that may be of interest to the audience. I mean, the property taxes. There was a scheme to the extent you bought a property, you would get a 5% refund up to a maximum of 500,000. That was due to end on the 30th of June. That's been extended by 1 year. And there's also the 5% refund to the extent that that an individual is taking a housing loan. Again, they would be eligible for refund of 5% or a maximum of 500. That also was finishing on June, and June 21st or 22, that's been extended. Other thing that may be useful is that the removal of duty and on electric cars and hybrid. So as from 1st of July, there's no more duty on that. And the rebate scheme under other cars, which is not kind of subject to the duty free. I mean, there was a rebate which is available up to 30th of June 22. That's also been extended now for another year. And then there's other little things. I mean, there's the 8-year tax holiday if you want to go into planting. I mean, as Pierre was saying earlier, there's the push for agriculture. They've given 8-year tax holiday on that. And there's also the abolition of municipal taxes on family homes. So that's another populist measure which we announced as well and which will benefit individuals. Now, if I quickly go into tax administration, I mean, there's not been much there. I'll just highlight a few things. In terms of tax administration, I think one of the things that's been increased is the tax deduction at source. I mean, before it was 3% for professional services. I mean, accountants, barristers, engineers, and property valuers, etc. So that's been increased from 3% to 5%, and the TDS on rent has increased from 5 to 7.5. And they're also now extending TDS of the 3% on other services such as consulting, security services, pest control, etc. So additional services are being brought in the tax net as well. And then the last point I wanted to make is really around the powers of the MRA. I mean, in this budget, they're giving even more powers to the MRA. I mean, now the stock exchange would need to exchange information with the MRA to the extent that there are transactions which are being undertaken and for individual and companies. So those information will be shared with the MRA. And there's also the power given to the MRA now to publish name. It's a name and shame list so that they can publish on their website. And on there, to the extent that companies are not submitting their corporate or VAT returns and are non-compliant, then those names will be published on their website. There's also additional powers in terms of the MRA for compulsory registration, or to the extent that, you know, taxpayers are not providing information, they have additional powers there. So what we can see is growing powers of the MRA, giving them more authority to get information, to obtain information as well there. So that's a little bit for me, Madhvi. So thank you for that.
Thank you very much, Anthony. A lot of clarification, and thanks for sharing examples of how tax and taxation is worked out. It provided real clarity. Thank you. I'm now pleased to invite our third speaker, Dr. Bhavesh Jagannath, to address you on the impact of measures on enterprises, on enterprises, investment and fintech. Bhavesh holds a PhD in economics and finance with specialization in international taxation and foreign direct investment, as well as a Master of Finance, a BA in economics and finance, a diploma in blockchain, and a certificate of digital innovation from ACCA. Bhavesh is currently the president of the Africa Emerging Tech Hub, vice chairperson of the ACCA Mauritius Network Panel, executive member of various international professional organizations such as the Economic Society of Australia, the Australasian Econometric Society, the African Tax Research Network, and the Indian Business Council. Bhavesh also sits on various committees on emerging technologies in Mauritius, Namibia, Rwanda, and Nigeria. With more than 20 years of executive experience in global financial services, Bhavesh has been assigned on several major projects, both locally and internationally, with wide industry coverage, which includes advisory of major investment funds, investment companies, and banks. He is also involved in a number of international projects for the International Trade Center, World Bank, AAUN, APEC, Melinda Foundation, MasterCard, COMESA, and the European Union. Bhavesh is currently working on projects in fintech, blockchain, artificial intelligence, and metaverse, mainly in Africa. Moreover, he was involved in projects of the Asian Pacific Economic Corporation, APEC, in Australia, Singapore, Indonesia, and Malaysia. He's also been involved in United Nations and European Union funded projects in Slovakia, Austria, and Italy. Bhavesh, you now have the floor.
Thank you, Madhvi, and good evening to everyone. For today, I'm going to talk in terms of, to start with some budgetary measures, some key statistics, and then I will go in terms of some measures that have been announced with regard to, I won't say fintech totally, there has been not much on fintech, but in terms of the ecosystem of fintech, there has been some changes that I'm going to present on. Investment and some measures for enterprises. And then I will just give my opinion, my personal opinion on some of these measures, and then a concluding remark. So to begin with, just before we get into the topic, just some flair in terms of what you see from this budget. First of all, what I've done is in terms of the economic strategy, just an analysis of the last free budget, including this one. So we have been in what we have been told and in every world, around the world. So 2 years of COVID, and then we are now in a situation, what we call the war crisis. And this is a double crisis. So we have seen from 2020 and 21 budget, the budget was presented with the strategy of a new normal. And there was, structural reforms, and also points was in terms of sustainable and inclusive development. And then last year, the three main objective was in terms of boosting investment, a new economic architecture, and very important was restoring confidence. And now in this budget, again, I think the three main pillars of this budget, as announced by the Honorable Minister, was in terms of the strengthening of the economic growth and resilience. It was also in terms of transition to a sustainable development model. And the theme, as others we have just been looking at the budget, with the people, for the people. So this was in terms of very important, the strategy of the budget, and also what is very important in terms of the investment strategy. As in all budget, there is the strategy, the investment strategy that a budget will usually look at. So again here, I've just been comparing the strategy. And again, for the last 3 years. So if we look at 2020 and 21 budget, there were what the minister, the Honorable Minister, there was basically around 10 measures, mainly in terms of what we call from the budget was le plan de relance, l'investissement de l'économie. So there was at that time, many support measures in the COVID situation and stimulation of various sectors. And there was some new sectors that were announced, for example, pharmaceutical industry. And last year as well, mainly the priorities, if we can say, was in terms of infrastructural developments. And for this current budget, taking into account the recovery plan, I think Pierre has touched a bit on that in terms of the revenue, the expenditure, where we're expecting that now we are expecting a higher, I would say, growth, but as Pierre has mentioned, we cannot compare in terms of percentages because we have been in 2 years in an exceptional period. But as Pierre has said, maybe we'll be expecting a growth of 8.5%. However, as the minister pointed out, that this budget is to be driven by investment in three main pillars: building resilience in the economy, public finances, and again, in most importantly, what he mentioned is in our people. So now, coming in terms of a pictorial figure of showing that whether we are really recovering, we can see from this graph, from a GDP perspective, there is a growth, even in nominal terms. And in terms of growth, not taking into account the real growth, as we are potentially looking from the budget, about 6.9% for this year and 8.5% for the next financial year. So we can say here that the optimism is here. The recovery plan, as stated in the previous budget, we can see from these figures that there is some optimism. Now, very important, as this will drive in terms of the analysis, what has been, in terms of the contribution to GDP, in terms of the main sectors. We see from here that the main pillars, just to name three of them, it has been the manufacturing, the financial services sector, and also the trade sector that has been contributing 13%, 13%, and 12%. So this has been the three main industry in terms of bringing growth and contributing to GDP. And of utmost importance here would be in terms of the accommodation and food services activities. This sector mainly suffered the highest contraction at around negative 11.2%. So this in a nutshell gives you a picture in terms of, where are the industries and the GDP actually being contributed. Now coming in terms of the post-COVID, for the last, I would say, 7 budgets, there has been several announcements in terms of making Mauritius a fintech hub in the region. This was in the last 6-7 budgets. Therefore, this current one, there has not been specific mention about a fintech hub. And I consider that, there has been more changes and more development in this particular sector, where now we are more than, looking in terms of financial technologies, in terms of digitalization, and as we can see in terms of the regulation that has been announced, mainly in the annexes, if you have been looking at. So there has been some changes, and I think that the government is, whatever has been announced last year in terms of the fintech area, I think this is being pursued. But in this present budget, there has been some more towards some regulation that will be, enacted. So first of all, in terms of the banking legislation, it appears to be, as I said, for the time, very minimal in terms of fintech. However, in terms of the Bank of Mauritius Act, it has been announced that it will be amended to empower the Bank of Mauritius to engage in trade that relates to the activities of, first, the Bank of Mauritius Museum. And the Banking Act will also be amended to require any person who wishes to carry out a due diligence exercise on financial institution with the intention to acquire shareholding in such financial institution to sign a declaration of confidentiality. So I think this will have an impact on what in the new act, what I'm going to talk in terms of virtual assets a bit later. So this was an issue there. So I think in terms of confidentiality, this change in the Banking Act would be helpful. And also, following amendments to the Bank of Mauritius Act, the Bank of Mauritius shall increase the functionalities of the central KYC. And this is a long-awaited project that has been announced for the last 2 years. And there is also the Central Accounts Registry established by the Bank of Mauritius to facilitate collection, verification, validation, and extraction of KYC records. I think this was one of the key components that was missing in terms of the digitalization, whether we are talking about digital custodian, virtual assets. So I think through these amendments, I think the government will be in a position to pursue forward in terms of the fintech agenda. Moreover, there would be some amendments in terms of the Banking Act, which will allow the Bank of Mauritius to require a licensee to comply with confidentiality requirements specified in the guidelines, directives, instruction issued by the Bank of Mauritius. Though there are not much information at this stage, but I think that will be coming in the Act, probably in the Finance Act. And in terms of probably the Banking Act that has been also been amended or being proposed to amend, is to remove the possibility of the BOM to grant an in-principle approval to the applicant in context of an application for a banking license. And I think here, in terms of what we are looking, probably in the new, banking products that, we are looking in terms of financial technologies. So I think again here, in terms of the documents, the fulfillment, there will be some conditions that will be attached. And I think the next slide will talk about that. So the long-awaited CBDC that has been announced since 2020, and this is directly related to the digital currency project. There has been some amendments proposed to the Bank of Mauritius Act for the creation of such a CBDC. So this has been proposed. So this shows that sooner or later, this is still is on, and it's in the government agenda to come on that. And if we go further, what has been also suggested is an amendment to the Bank of Mauritius Act for the Bank of Mauritius to open accounts and accept deposits from persons for the purpose of issuing digital currency. And also, the Bank of Mauritius Act will also be amended in a way, I think this is a repeat. So I think in terms of digital currencies, we are here, and this is what we were awaiting, given that the last budget in India, in many other countries, in China, the post-COVID agenda of many governments is in terms of this digital currency, the CBDC. So I think through these amendments, I think that we are hopeful that this will be a reality. I think we have touched on that. Sanjeev did mention a bit on that, but I think, in my opinion, that is commendable on the part of the government, where there has been three main, I would say, in the digital arena that has been announced. Mainly first is a regional RMB clearing center this year with the Bank of China. I would say that this is already in the agenda of other countries, mainly in Africa. So I would tend to believe that the competition is fierce in this regional RMB clearing center. And this is a good move, especially that RMB is now being used outside of China. So I think that this would open Mauritius as a gateway, especially in Africa. There has also been the RuPay that has been announced, that the Bank of Mauritius will issue RuPay cards and Indian QR code in Mauritius. So in my opinion, I think this would be an opportunity given the growing Indian diaspora in Mauritius. And I think that this move, in my opinion, is logical to allow the Indian diaspora to have easy access to such payment methods, taking also into account in terms of, the frequency of this happening in terms of the RuPay as a platform, again, in Africa. Also, I think very important, a national payment card that will be introduced for the Mauritian market. And this will allow bank to provide payment cards. I think this comes in terms of the thinner profit margin in terms of, that maybe card users has been facing with this looming recession. So I again will welcome this attempt to ease the burden of such businesses. So I think that will be beneficial to customers in terms of cashless purchases. And I think that's very important in terms of the fintech agenda of the government, where recently in January, the Virtual Assets and Initial Token Offering Services Act was voted. However, I believe from several discussions, there were still some loopholes. So there has been some amendments that has been announced to allow the FSC and the relevant authorities to use software digital tools in carrying supervision and investigation. I think this was, some of the regulation that even at the level of the OECD, they have been working on, and this has been announced. Again, in terms of this Vitus Act, it will be amended to allow information obtained by the FSC and relevant authorities from the software and digital tools to be admissible as evidence in criminal investigation, prosecution, and other related criminal civil court proceedings. In the same vein, what has been announced in the Securities Act, amendments will be made to allow official exchange to allow for investigations of market abuse cases involving users of securities exchanges. And this mainly pertains to some probable, digital platform. I'm not saying about crypto, but some online digital platforms that might be coming. There is also, in terms of the Financial Services Act, a new committees that would be new committees as a settlement committee under the chairmanship of the Prime Minister, in terms of extending powers to existing regulatory bodies so that they are all aligned to common purpose of ensuring that Mauritius retains its strong and reliable reputation from a compliance and regulatory perspective. I think this will enhance our jurisdiction to be more business friendly. And that was very important in terms of, after the FATF and also in the new Vitus Act. I think that was very important. So I would take that to understand that the government is looking in a way to rearrange the supervisory framework for more efficient control and monitoring of various licenses and corporate structure that has been made. And you will recall maybe in the Vitus Act, there has been 5 classes of licenses that are involved in this act. For example, for the custodian, digital custodian. So I think from a regulatory perspective and from the virtual assets and the fintech, I think these moves are commendable. There is also now upskilling was very important and skills was very important. As we have seen in the sector, in the ecosystem, there was various appeal was made in terms of upskilling and in this sector. So I think what was announced, the Digital Industry Academy, to provide training to individuals. I think it has specified 1,000 individuals in data communications, 5G, cloud computing, AI, and cybersecurity as from July 2022. And the DIA will partner with telco providers, banks, and international players to provide mentoring and financing to 50 incubators. There has been also announced 15 million to ensure access, continuous access to government e-services. So I think this upskilling would really prepare us for the digital economy. I think that this would be a great contributor to this ecosystem. However, I would also, I think I was expecting more than that, mainly in terms of Industry 5.0, that maybe more skills would be needed in terms of, especially in the accounting field for accountants. With, there is the triple entry and all that is coming. So I think I was expecting a bit more than that in terms of RPAs, machine learning, amongst others. And I was also expecting some more incentive in this respect of this digital industries to various other sectors with digital technology. This goes also in terms of other sectors where in this budget, we have now been learning and what has been announced in terms of sustainable agriculture. I think that is very important, as I think Pierre did mention, in terms of a very big part of this budget was on the agriculture, which I will say is very good. I personally, in terms of food security, I would say that this is commendable. And one of the measures that has been announced is a newly integrated modern agricultural morcellement scheme for those developers operating a plot of land exceeding 2 acres. So for that, planters engage in sustainable practices should be registered to the Economic Development Board. However, I would say, in my personal opinion, the sustainable agriculture should be the definition. We are still awaiting what is the definition for that in terms of sustainable agriculture. And I would say that in the current context where the world is moving, everyone is looking for agriculture. I was expecting a little bit in terms of a smart agriculture. I think that this is where, the economy can move more in terms of increasing the GDP share of agriculture, taking into account the climate change of Mauritius, and to go more towards improving the GDP. I think maybe some mention, I would have been expecting some mention toward this smart agriculture. I think in terms of ease of doing business, I'm not going to be to go too much on that. I think there has been mention on that, but very important in terms of ease of doing business. The Bank of Mauritius will ensure bank accounts are open within 1 week. There has also been announced that it will be free to start a business and incorporate a company in Mauritius. Which companies, what type of companies, I think we will need to wait for that. And I think in terms of SMEs, I think very good will be the business regulatory reform bill in terms of facilitation of business that has been announced. And I think I will comment on also this tax allowances to be granted to angel investors, providing seed equity financing to SMEs. And this MIC venture capital for SMEs in terms of business for 5 billion for SMEs and mid-market enterprises. However, I would say that this is very good. First, that MIC is now catering for SMEs. I think that was a very good initiative. However, I would tend to believe that the challenge would still remain in terms of SMEs repaying their loans, given the levels of vulnerability for the last 2 years. This is one. And second, I would say that, the challenge would be the venture capital is very good. I have been a banker, and, in terms of managing a venture capital, I'm a bit, I would say, skeptical in terms of whether MIC would fit in terms of managing that, a venture capital, having or maybe currently not having the necessary skills, or maybe they would have to recruit the skills that would be needed to manage a venture capital, like banks do have in terms of this expertise. So I think in terms of the family office, this has been announced. The business regulatory reform bill has been announced. And I think to consolidate as an IFC, to consider the position of Mauritius as an IFC, the current requirements for high net worth individuals and families have been announced to be reviewed to a minimum portfolio of $5 million USD per management family office. So I think that's a very good initiative on that. And this will be facilitated more with the business regulatory reform bill. I'm just looking for the main points because I know I'm just a bit out of time. And I would say in terms of general, the pandemic has renewed and anchored the role of digital government in other countries, both in conventional delivery of digital services and new innovative efforts. So fintech and digital banking products is inevitable for Mauritius to position as an IFC to showcase the competitive advantage. So I think the need for the hour continues to be digitalization and innovation across all sectors. This was long awaited. However, I would say that in my personal opinion, more should have been given in terms of innovation. There has been, as I've mentioned, few measures announced, but I think in terms of innovation, maybe more schemes, as has been done in Singapore, in India, in China, in terms of coding, machine learning, that would have been very useful. But as a remarks, I would say everything as in all budgets. For example, in this budget, about 500 paragraphs, many things has been announced, which is very good for this third budget of the minister. However, very important would be in terms of the realization of the projects. And I would personally believe that in terms of an authority to look in terms of the budget realization would be very important. So implementation of measures announced follow the intention. So I look forward that whatever has been announced as intention would be realized. And the challenge to bounce back remains, and only time will tell how effective those measures will prove, whether we will be able to achieve the set target in terms of the GDP and in terms of economic growth. So on that, I would say thank you. I end here.
Thank you, Maurice. Dear friends, ladies and gentlemen, I would like to thank, first of all, our three speakers, Anthony, Maurice, and Pierre. And of course, I would like to thank everyone present tonight, and we are running a bit late, but I think it is worth going into the details. I've got a few questions, and what I will do is I'm going to ask the questions directly to the speakers, so that we can save a bit of time on that. And of course, if the other speakers want to intervene, they will be free to do that. I've got a question for you, Pierre. Government, through this budget, is relying on economic growth to boost revenue, and this economic growth, will create, things for our country so that we can move on. On the other hand, we have not heard anything about containment of government expenditure. So relying only on revenue for the growth, and we have heard previously, Anthony was telling us about the tax issue. The 110 billion tax revenue is expected, and this could be quite ambitious. So don't you think, Pierre, that this is a dangerous strategy? It is an unfortunate, it is, I fully agree about that, this question being raised. No mention at all made of control of expenditure. As far as I remember, maybe I am making a mistake, but I don't think there was any reference to that. And God knows how often we hear the director of audit complaining about the expenditures not being the right ones. So I fully agree. This should be part of the whole program. That also that there is control, proper control over public expenditure. It is unfortunate to have to make the point that too often one does hear complaints about the quality of public service. It is a fact. We hear it on the radio often. So we really need proper governance. I did say, by the way, that we need proper governance, and we need this proper governance in the public service amongst the people who rule over us, and also in the private sector. Governance is terribly important if we are going to get somewhere in these difficult times. Very good, Pierre. Thank you very much, Pierre. Anthony, I've got a question on the global business. There is a general thinking that our global business sector needs to renew its business model, as more and more Mauritius is becoming more or less a back office for big operators who create value added in other sophisticated jurisdictions and use Mauritius as a back office. Do you think that the measures announced in the financial sector will really modernize our financial industry?
Yeah, thanks, Nancy, for that question. I think it's very legitimate given where we are in the global business. I think if I look at the budget itself, the only mention that has been made is that they would be adapting the legislative framework in order to look for a convergence between the domestic and global business regime. But I must say I was, looking for more and looking for what it meant. Maybe it was hidden in the annex, and I kept looking. But unfortunately, there has been very little information as to what exactly is meant by that. There's been, various blueprint done for the financial services sector, there's been some discussions around, how to move up the value chains and some of the products that would be required around private wealth, around fintech, and these would kind of move. But unfortunately, the absence of detail and information around, new measures or other kind of information on this convergence doesn't allow me to say what's the thinking here, Clancy. So yes, I mean, we were waiting for information. Yes, they have said they, and as Bhavish said earlier, they would be leveraging on the fact that we're out of the grid East, further enhancing the KYC and the AML, and the central KYC would also help make it more efficient in terms of client acceptance and etc. But in terms of products and value enhancement and upskilling, there unfortunately hasn't been much there, and it just begs the question as to what's this convergence in between the global business and the domestic is, unfortunately.
Thank you, Anthony. Before I go to Bhavish, Anthony, I got two small questions which relate around the new definition of SME. I've got a good question from Jean-Marc Sapana, who asks, enterprises which have a turnover below 2 million, previously we were calling them micro. How are we going to call them now?
That's a good one. I think on this one, it would really be, I mean, it depends, labeling is one thing, but the what matters most to enterprises is what the classification allows them in terms of eligibility for schemes and others. So at the moment, they have relabeled the definition and upskills in terms of the threshold. And the only thing they have said in this budget was around the salary compensation scheme. So that's what's available at the moment. But maybe there will be further enhancements and regulation that will come in terms of entitlement for those other micro enterprises.
Okay, thank you. Bhavish, a question for you. We have not found a lot in terms of to spur growth. We have not heard a lot about the blue economy, about new technologies. 2 years ago, they were talking about digital hub. Nothing has come out of that. We're expecting things about pharmaceuticals, biology, bioscience project. Do you think that the package of incentives is enough to drive private sector investment and achieve the level of growth the minister has announced?
Very good question, Clancy. So first of all, I think I would say that you're right in terms of the different, digitalization packages that were offered in the last two budgets. I did mention a little bit of that. We could not see much in this current budget. However, I would say in terms of growth, definitely where we are, my personal opinion is as we are targeting 6%, 6.5%. Personally, I was looking for some new emerging sectors to come to in this budget. Previously, as you rightly said, there has been the biotech industry, pharmaceutical industry that were announced, but I was expecting more towards innovation, new emerging sectors. I personally believe in terms of growth that the target set for the time, maybe just relying on the tourism sector might not really drive to that 6.8% that we are expecting. So to drive growth, I would expect that there would be some new industries. And for example, I would say in terms of following, in terms of the fintech that we have, that has been mentioning. And this is where I did mention that I was looking more towards, across sectors, that there is some digitalization policies that would be there. It has been announced, for example, some e-services that will be extended, but I think more than that in terms of the digitalization process. In terms of moving, what has been announced in this budget is a continuity of what was announced the last 2 years in terms of the central bank digital currency. However, I would say that, for that, we really need some more in terms of infrastructure, I mean the ecosystem. EKYC has been there, but I think in terms of implementation, there has been some issues. So I think overall, to answer your question, I would really believe that in terms of growth, more emerging sectors would be needed. Continuing in terms of our traditional sectors, yes, but in terms of the future, I think emerging sectors would need to be here.
Okay, thank you, Maurice. Pierre, come back to you in a question. I will test whether you can be a magician or not. In the event that the Russia-Ukrainian war continues for a few months, inflation in our country will become uncontrollable. We know about that. And this is a factor which will certainly slow down economic growth. Do you, Pierre, have any solution to deal with this inflation monster?
I am not used to fighting against monsters. It is right to say that worldwide, at least this is what I am reading these days, worldwide, there is a risk of a reduction in economic growth, starting with the United States, going to the UK. At least these are two countries I have been reading about recently. So there is a real risk because of these high prices, which is not just particular to Mauritius, but we are facing a possibility of worldwide, shall we call it, as it used to be in the early 70s, stagflation. Prices go up, growth doesn't go up. So we have this risk. And if this happens in these large developed countries, we are bound to be affected, given, as has already been said and everybody knows, that our economy is terribly extrovert, whatever it's called. We need exports. We need to export our services to tourists. We need to export our various goods we produce. So there is a risk that we be affected. Unfortunately, we are not les maîtres à bord.
Thank you, Pierre. Probably it is also high time that we look at the costs. And when we talk about government expenditure, we have not had a lot of savings in government spending, right? Probably this also would become an issue, I guess.
And the more so, as I think I alluded to that earlier, the more so that some of these social expenditures which have been announced and for this year, we are going to just carry them on and on in the coming years. So what is decided for this particular year is true for the following years, probably in devalued rupees. So we have to be very careful there. We vote for social expenditures. Maybe many of them were required, but we must make sure that we get the production, the economic production, the economic wherewithal to be able over the following years to be able to withstand the cost, these additional costs which are going to be voted this year.
Okay, thank you. Anthony, a question which concerns accounting. Accounting is getting very much concerned with a new definition of SMEs. And a question has come up. Should local companies between annual turnover between 50 million and 100 million, because now that they are classified within SMEs, carry out audits?
Yeah, that's an interesting one, Clancy. The previous threshold was the 50 million, and really they were looking at small and medium enterprises that didn't need to have the audit. The big question now would be, given the redefinition that's having in the SMEs, whether the fact that these are classified as SMEs, they won't necessarily be requiring audits. I think it's a very, very valid one. But in my view, that threshold of 50,000 was there. Yes, it was kind of linked to SMEs to some extent, but I think it was there, and there would be some, consultation that would be needed with the MIPA and the sector in order to understand the implication, because if it's gone, the threshold is gone high, then a lot of companies would get out of it, and auditing and gives comfort around the financial statements and the banking sector, everything. So there are a wider implication to increase that threshold to 200 million. So there would need to be consultation, I would say.
I guess they would do that, and I hope that MIPA and ACCA also would have to stand the fight, because otherwise there will be a lot of work of accountants. There will be no need for it, so part of our bread, which is already small. Okay, Babish, a question which is quite general, right? And I guess that you would have an answer for that. So, what is the main game changer in this budget, which would really act as a catalyst for economic growth?
The game changer, I think, in my opinion, it will be what we see from the reading of the budget. It has been first, in terms of agriculture, sustainability. However, I would say that in terms of game changer, I think very important, as the minister has pointed out, it's a bit in terms of for the immediate impact from the double crisis. It has mainly be in terms of, I would say that this budget concentrates a lot in terms of the social issues. So I think for the very immediate, I think if we look at the, in terms of debt, I think this was the two main factors behind I would say the difficulty in presenting this budget, as pointed out by the minister himself and the prime minister, was first inflation, cost of living, and this was in terms of trying now to sustain and recover the economy without compromising, especially the low-income earners and the middle-income earners. So I think before going for the game changer, I think the two things that came out from the Moody's report and the last World Bank report was clearly in terms of fiscal consolidation and also in terms of debt. So that's why I would say from an economic perspective that not many measures or sectors have been announced, but it has been mainly concentrated in terms of trying to get away with the social crisis. So ensuring that, the population first can, sustain their day-to-day living. However, having said that, as I presented, in terms of few measures, in terms of the different sectors, mainly concentrating on, the fintech sector, the agricultural sector, for example, and the various, in terms of the SMEs. To be honest with you, in terms of the game changer, I think not going too far and looking what is practical, the game changer will be in terms of the SMEs. Why? Because the SMEs are actually, they are contributing to 50% of employment, right? And if you look at the statistics that I have been showing at the beginning of my presentation, that there are 2 or 3 sectors that are going very strong in terms of manufacturing. So I would say that empowering the SMEs and with the new categories that has been enlarging these SME categories in terms of schemes, if done very well, I think the SME and the agriculture sector would be the game changer. However, as I said, more needs to be done for that.
Thank you, Bhavish. I think you're very right. Probably I'd like Tony to make some comments on that also. You think, Tony, what really should be the game changer, right? Would that be SMEs, according to you, and also agriculture, the new green economy that the minister has put forward?
I think, you know, the budget, I mean, a lot of the time has put a lot of emphasis on infrastructure as one of the drivers of growth of efficiency. And for me, some of these projects could be, of money dedicated to project could be better utilized towards more productive assets. For example, for me, the port has a big part to play. I mean, not only in terms of logistics in hub and becoming a logistics hub for the region and ships, but also for our export sector as well and import as well. So for me, there are avenues in terms of diversification, in terms of the blue economy, in terms of logistics hub, in terms of education hub. I mean, there's been a lot said around, you know, the aging population and the lack of skills. So for me, this idea of becoming an educational hub for the region does make sense, because once you bring, you know, young international students here, then they would be embedded with the culture, and then there's a whole industry around that. So for me, the real game changer will be around building this new infrastructure around the productive aspect, especially around the port, and also the you know, really consolidating the position around education hub, because I think the education hub has more knock-on effects in other areas in terms of population, in terms of young professionals. I mean, that we're really struggling to have.
Very good, excellent. Pierre, a last question for you. I think we are just running out. We are just off 19 hours, 19:10. So I got a last question for you, Pierre, before we just wrap up. A simple question, right? How the budget deficit of 4% will be financed? How do you think the budget deficit of 4% will be financed?
It will be financed via more borrowing by government, increasing the public debt.
Absolutely. I think
the only good thing to know is that overall our public debt is more towards local investors, local capitalists than foreigners, so that it affects the service of the debt affects the budget figures, but it doesn't affect so much the balance of payments. Yeah. If I may just make a point about the previous question, if I have 1 minute,
yes,
about talking about game changers, it's very good that more attention is being paid to SMEs, but we should go even further than SMEs, and we must try to get rid is impossible, but to reduce the size of the black economy. There are two types of black economy, the legal one and the illegal one. I'm not talking about the illegal one. I am no expert on drugs. But on the legal one, I think we really need to bring into the fold all these people, not the SMEs, but all those who are working on their own and who are making money or perhaps not making money and who are perhaps not paying properly their staff. This also must be brought into the picture and, of course, apply to them what the minister is now providing for the SMEs.
Fantastic. Very good. Yeah. Okay, so I think we've reached the end. We've answered all the questions, right? I would like on my own to thank, first of all, the three speakers. Pierre, thanks a lot for your highlighting us on the economic side. Anthony, right, you've been very clear on the taxation. And Bhavish, you give us some very nice insight about fintech, about the way forward, right? I would have loved that the Minister of Finance listened to those debates also, right? To know exactly what professionals think in the private sector. Madhvi, it's up to you, right? I would like also to thank all the participants, right, to this interesting forum. Thank Thank you very much from me.
Thank you very much, Kansi. Dear guests, we have come to the end of our discussion forum. I hope that you have enjoyed the interactions. We do agree that there are a few game-changing measures. Time will tell how future-proof these measures are. Clearly, though, many key aspects actually seem to be missing. We mentioned innovation, port services, and even new industries. And there are also several grey areas and question marks, especially with regards to structural reforms when we look deep down. Finance professionals have played an undeniable role in building our country for decades. The financial sector achieving 11% of our GDP while borders were closed during the pandemic speaks for itself. And today, more than ever, the role of finance professionals is critical as we join hands to shape historical resilience together. I thank all three speakers for readily accepting our invitation to deliver their commentary on various aspects of the budget, and our moderator for facilitating discussions. Thank you to MIPA as well for their partnership. Dear guests, it was a real pleasure to have you amongst us. I hope to see you all again very soon at our events in future. Have a lovely evening and a lovely week ahead. Goodbye for now.